Yeah, good morning, everyone. It is February 7th, Wednesday, right? Middle of the week, as this market has started its rally. Um, Hold on one second, people, as I get this ready. Duh, duh, duh. So, again, we're back. Good morning. We've started a decent little move to the upside on the overnight session, as yesterday on the S&P we had many trap traders into that mid to high 50, I should say. And that was a key pivot for the session yesterday, for the overnight, and as we have it right now, we're building momentum to that upside swing. There's a few things to talk about here before we take a look at the trade plan on the day. And we've seen, right, the markets the economy has experienced multiple rate hikes over the past few years, we should say, and right now we're coming into a lull of that hiking period. So the warnings, they've been coming since the Fed started this aggressive rate hike cycle about 2 years ago, but worries are starting to pile up about the health of the commercial real estate properties and bank loans that support them. So according to the St. Louis Fed, 2/3 of the CRE loans are held by community or regional banks, meaning that if things go sour, the sector can fall under immense pressure. As a result, financial regulators are keeping a very close eye on the industry, but as in the case of the Silicon Valley Bank, it may be hard to take sufficient steps in time despite many supervisory warnings. Treasury Secretary Janet Yellen said in some of her testimony before the House Financial Services Committee, I do have a concern about the commercial real estate, and I believe it's manageable, although there may be some institutions that are quite stressed by this problem. The higher interest rate environment, and in some cases, particular the case in office building shifts due to the pandemic, coupled with many commercial real estate loans coming due and needing to be refinanced in a context where vacancy rates in some of the cities are quite high. Is going to put a lot of stress on the owners of these properties, and so banking agencies are very focused on the banks managing through these situations. They're in some cases working to make sure that loan loss reserves are built up to cover losses, that dividend policies are appropriate, that liquidity is adequate. So there are some industry players that are also taking notice, right? Moody's Investors Services downgraded the New York Community Bancorp credit rating to junk late on Tuesday after Yellen's testimony, citing that financial risk management and governance challenges. Shares of the lender, which have been in the spotlight, dropped nearly 17% to $3.50 in the after-hours trading after tanking a 22% during the regular trading session. It was only a week ago that the stock was changing hands near the $10 level, but a surprise quarterly loss in provisions for credit losses set off alarms, while commercial real estate worries didn't help the situation. So there are those that are concerned about broader stability of systemic risk, especially if disruptions spread to financial markets and the real economy. Interest rates are also likely to remain high, with the Fed taking the March cut off the table, while the long inversion of the yield curve isn't helpful for banks to borrow short to lend long, right? Contagion on and CRE crisis could see thousands of banks fall under the worst case scenario, according to many analysts. So back to the regional banks, not necessarily affecting markets as we've been ripping even on this overnight session. There's not too much else to discuss. There were some earnings that continued to lay over the past week, right, even into the extended hours trading session. And also less than a month ago, into the recommendation, traders at JP Morgan have issued a mea culpa on their cautious call of U.S. stocks, with the trade desk now saying that it's tactically bullish. So the flip of the trade desk, right, we know Marko Kolanovic, he's the head of the equity and derivatives desk, if I'm not mistaken, right, global strategy team. Whenever he flips, right, markets generally reverse. It's somewhat of a little Jim Cramer, and now if he's bullish into these all-time highs, we could see maybe capitulation. So Marko Kolanovic, which has consistently warned about stretched valuations in tech names and the all-in attitude of the market on the U.S. soft landing, the trade desk team says that big challenges the big change is mega cap tech earnings that decoupled from the bond yields. And if investors are also looking to go beyond overweight on a group, now may be the time to do so with the Magnificent Seven and some hedges, right? Trading into all-time highs, I'm not necessarily sure that this might be the best piece of advice from Marko Kolanovic and JP Morgan, but as this thing stands, right, there's no necessary bearishness and turning in the market as of yet, right? We're about to pop into a new high. I don't quote me on the prior all-time high on the S&P 500 futures, but I believe it's like 98 or something, just shy of that 5,000 marker level. So it's something to consider and watch for. Today, we're very close to opening near an all-time high. Well, we are probably going to open near an all-time high, and we'll see how things explode from there. Trying to short an all-time high could be a very, very aggressive mission, right? And can result in many fades and losses. So when we're trading at all-time highs, I kind of just let this be and see what kind of pullbacks manifest, and if anything turns over in the market to see if we can continue that leg. Generally moves above all-time highs, 5,000. You probably have some legs higher, so I'm not necessarily very bearish trying to sell into this as of yet. Right now, we have a key area to hold out, in my opinion, into that low 80 on the S&P 500 futures, 49.80 to 84-ish. Pullbacks into that region could mark some kind of bullish behavior to continue that leg higher. Realistically, I think it's going to be a little more difficult to be bearish until prices actually start dropping under 49.75. Anything above that level, I consider it a fade against the overall trend. NASDAQ, right, had struggled a lot yesterday, which came to me as a surprise realistically to see this large of a divergence in these equity markets. But NASDAQ right now rallying pretty well, trying to break into a high of its own realistically. Let me just see here. So that would mark very close to that 17,800 level, right? A level that we're pretty close to trading, about 50 points away right now, 45 points away. And if that breaks and we actually start getting an accelerated move above that, I think that there is more bullishness that gets absorbed in this market to continue that leg higher. NASDAQ, for me, a key pivot is 730 as it was yesterday, as it will continue to be realistically. And I'm just going to be watching to see if they manage to hold prices above that. Right, it's a shorter wrap up today. I hope you guys got a lot of information from that. That's the plan that we're going to head out and look to trade with our room as we open our trading room, our live trading room on Zoom this morning. So if you guys want access to that, check out TRADEPROacademy.com. And we had a little preview of it last Friday where we traded that morning session together. There were some good trades, pretty much just straight bullish, trying to buy dips on this market that rallied very aggressively. And we'll see if today is such a case as well. Trading into all-time highs like this, right, I want to be extremely cautious and not get too active. Maybe try smaller size here and there to see if that expansion continues or if any sellers come in, right? We'll have to see. But right now it's in a bullish territory, right? We've been pretty bullish since that 56 yesterday, especially since traders got trapped into that area. And I'm looking for potential continuations through this all-time high and pullbacks to kind of just get bid back up. NASDAQ and big tech is one of the main things that I'm going to be watching to see if there's follow through to the upside as well. And right, if you want more information on this, you can check out community.tradeproacademy.com where we have our free Discord, and we'll be opening up our live room with our team in just a few. So, let's see. Right, let's see what we get. I hope you guys have a great middle of the week day, and we'll be back tomorrow in the remainder of the week, right? Market's continuously rallying here. Not much to say. Don't try to continuously sell this, as we've seen good strength popping in. So I'll see you guys tomorrow. Let's open up our live